Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to have the opportunity to address such a distinguished audience. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com, Telegram, Vietnamstockmarket.entry, with the phone number is +8491 432 6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyễn. She's a personal financial advisor and a Viet Capital Securities stockbroker manager. You can contact her with the email hongdongyuan@vcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trinh Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about PVT. PVT owns the largest liquid tanker fleet in Vietnam and holds the dominant market share for the crude oil transportation of Bình Sơn Refinery, 420,000 deadweight tonnage, 30% for oil products, 130,000 deadweight tonnage, 100% for liquefied petroleum gas, 22,500 deadweight tonnage, 10% for coal transportation, 83,000 deadweight tonnage, and 10% for floating oil storage. And this is the report which was collated by Viet Capital Securities about PVT, Petro Vietnam Transportation, on the 30th November 2022, with the current price is 19,100 Vietnam dong. Target price 23,100 Vietnam dong. Last target price 26,000 Vietnam dong. Robust global freight rates to boost 2023 operating profits. We lower our target price for PVT by 11% to 23,100 Vietnam dong per share, as we increase our both equity risk premium and cost of debt assumptions by 100 basis points, but maintain our buy rating. Meanwhile, we keep our 2022 to 2026 forwards net profits after tax MI nearly unchanged. We expect 2023 forwards recurring net forwards after tax MI growth of 18% year-over-year that will be mainly contributed by the crude and oil product chemical segment as we anticipate the global tanker rates after a robust growth in 2022 to stay high in 2023 and reflect in PVT's earnings. In addition, we expect flat 2023 forwards reported net profits after tax MI, which is supported by 18% year-over-year recurring net profits after tax MI growth and offset by not having tanker liquidation gains sets in 2022. PVT has strong financial capacity with 3.7 trillion Vietnam dong, 149 million US dollar of cash on hand at end Q3 2022. PVT is trading at a 2022 forwards EV per EBITDA of 3.5 times to 57% lower than its regional peer medium. Potential upside faster than expected reflection of global higher tanker rates into PVT's net profits after tax, downside rate higher than expected interest rates. and US dollar appreciation. Bright outlook for crude and oil product tanker rates in 2023. Per Bloomberg data, the Aframax time charter tanker rate Indonesia and Japan jumped 114.4% year-over-year in 10 months 2022, while the Aframax tanker port rate West Africa to US Gulf Coast skyrocketed by 275.5% year-over-year in 11 months 2022. According to Clarksons and PVT, the crude tanker market outlook remains positive due to one, underlying tanker fleet growth expected to be very limited with a small number of orders booked, and two, crude trade demand projected to grow as a result of significant shifts in trade flows to longer haul routes, gas to oil wishing and improved China's demand despite OPEC's oil production cuts. In our last update report, we forecast this recovery should start to reflect in PVT's tanker rates in H2 2022, which led to our assumption for the company's tanker rates to recover 5% year-over-year in 2022. However, we did not witness this in 9 months 2022 results. According to PVT, it is renewing many crude oil product, chemical, and LPG contracts at higher rates. Therefore, we delay our assumption of crude tanker rates recovering 5% year-over-year from 2022 to 2023. We also expect the positive effect from our higher tanker rate assumption to outweigh lower transport volume for BSR during its undergoing 50 days of maintenance in 2023. We expect PVT to acquire a crude oil tanker in 2023. PVT's latest guidance is that it will not complete its 2022 fleet investment plan. As of November 2022, the company has acquired 4 oil product chemical tankers and 2 coal carriers. This means that PVT will most likely to achieve its plan to acquire an Aframax crude tankers in 2022. Therefore, we delayed this tanker acquisition from 2022 to 2023. However, PVT's acquisition of 2 coal carriers beats our forecast for one. In addition, we estimate 2022 capex at 78 million US dollar, 1.8 trillion Vietnam dong, which is much lower than the planned capex of 123 million US dollar, 1.9 trillion Vietnam dong, partly due to cheaper than expected tanker investment values. Now we move to the next one, named 9 months 2022 recap strong net profits after tax growth from new tankers liquidation gain, with the figure number 1, 9 months 2022 recap. Revenue 1. Due to the better than expected performance of oil products, chemicals, and coal transportation that exceeded the lower than expected performance of crude oil tankers. Despite resilient domestic crude tanker demand in 9 months 2022, PVT transported 4.3 million tons of crude oil for BSR, much higher year-over-year due to 2021's low base. Overseas crude tankers did not perform well as they were locked in low rate contracts and did not benefit from strong global tanker rates. Two, driven by one, contributions from foreign new oil product, chemical, and coal tankers acquired in 9 months 2022, and two, a recovery of transportation demand. Transportation. Two, recovery of revenue for the crude oil product, chemical, LPG, and coal segments. Gross profit. One, gross profits were within our expectation. Two, increased profit from transportation. Financial income. One, following 9 months 2022 results. Financial expenses. One, higher than expected interest expenses. Given a higher than expected debt balance and foreign exchange losses due to the US dollar appreciating against the Vietnam dong more than expected. Two, more volatile US dollar per Vietnam dong exchange rate and higher interest rates compared to 9 months 2021. Net other income plots. One, the income from the Athena crude tanker liquidation was 225.6 billion Vietnam dong, which was higher than our forecast of 100 billion Vietnam dong. Reported net profits after tax MI. The discrepancy between reported and recurring net profits after tax MI was mainly due to income from the Athena crude tanker liquidation. Recurring net profits after tax MI. One, meeting 60.5% of our full year forecast, mainly due to higher than expected interest and G&A expenses. Two, driven by our contributions from new tankers acquired in 9 months 2022. Details on pages 6 to 7. And B, a recovery of transportation demand, particularly profits growth in the oil product and chemical coal segments. See figures 2 and 3. And now let's go on to the figure number 3, transportation performance in 9 months 2022. Fruit explanation. Q3 2022 gross profits and GPM was better than in Q2 2022. However, 9 months 2022 gross profits and margin respectively decreased 17% and 6 PPTs year-over-year due to one, low crude freight rates for some international contracts despite resilient domestic crude transportation demand, and two, the growth of crude tanker rates not being reflected in PVT's crude tanker rates. All products per chemicals. Domestic markets, PVT transported 1.92 million CBM of oil products for BSR and Nizam refinery, more than 0.1% year-over-year in 9 months 2022. Robust profits and volume in 9 months 2022 were mainly driven by the international market with one, higher freight rates for oil product and chemical tankers, and two, the contribution of new chemical tankers, PVT Sunrise, PVT Flora, Bareboat, PVT Stellar, PVT Eleanor, and Aquarius. Coil. Gross profits increased more than nine times year-over-year, which was supported by the contribution of new tankers, Epic, 9, international market only, and bulk Areca. However, the decline of this segment's margin was mainly due to a lower coal freight rate than in 9 months 2021. LPG. The decline in 9 months 2022 gross profit was driven by a lower gross profit margin, mainly due to low freight rates in Q2 2022, which outweighed 18.8% year-over-year revenue growth, with contribution from the very large gas carrier acquired in Q3 2021. And the next that is 2022 outlook, coal and chemical tankers to boost growth. Transportation. Firstly, we increased our revenue forecast by 7.6% following 9 months 2022 results as revenue from oil product, chemical and coal tankers meet our expectation. In addition, PVT acquired 2 coal carriers compared to our forecast of 1 carrier. These factors outweigh the delay of the Aframax crude tanker acquisition from 2022 to 2023, as well as the delay of crude tanker rates increasing in 5% from 2022 to 2023, as we did not witness the strong global crude tanker rates being reflected in PVT's 9 months 2022 results. Gross profits. Secondly, mainly driven by increased profit from the transportation segments. Transportation, driven by one, contributions from new tankers acquired in 2022, and two, a recovery of transportation demand, particularly profit recoveries in the oil product and chemical and coal segments as more oil product and chemical and coal tankers than planned offsets the delay acquisition of the Aframax crude oil tanker, which we expect PVT will make an investment in 2023. General admin X. Following 9 months 2022 results. Financial income. Following 9 months 2022 results, in which interest in expense. Following 9 months 2022 results, as we forecast a higher debt balance and US dollar per Vietnam dong exchange rate in 2022. Net other income per lot. 1, we reflect higher than expected income from the Athena crude tanker liquidation into our forecast. 2, abnormal other income is mainly from the Athena crude tanker liquidation in Q3 2022. Reported net profits after tax MI, supported by core profit growth and one-off income from the Athena crude tanker liquidation. Recurring net profit after tax MI. 1, we raise our G&A and interest expense forecast. 2, driven by 1, contributions from new tankers acquired in 2022, details on pages 6 to 7, and 2, a recovery of transportation demand, particularly profit recoveries in the oil product and chemical and coal segments, as acquiring more oil product and chemical and coal tankers than planned offsets their delay acquisition of the Aframax crude oil tanker. which we expect PVT to make an investment in 2023. And let's move on to the next one. 2023 outlook. Crude tanker rates to recover. Higher contributions from tanker acquired in 2023. Revenue. We expect the transportation segment's revenue to increase 11.8% year-over-year as one. Renewed contracts will have PVT's crude tanker rates be in line with global rates that have risen since 2022. We assume this tanker rate growth to be more than 5% year-over-year in 2023. Two, the contribution from new tankers acquired in 2022 and 3, as we expect the framework's crude tanker oil tanker purchase will happen in 2023. We expect these factors will outweigh lower transport volume for BSR due to its undergoing 50 days of maintenance. Floating oil storage trading and others due to removal of the FPSO Chimsao contracts following PVT's guidance, in which interest expense, driven by a higher debt balance from new fleets and higher interest rates. Reported net profit after tax amount. Due to recurring net profit after tax amount growth and not having a tanker liquidation gain as in 2022. Recurring net profits after tax amount, we expect growth across all segments, especially the crude and oil product, chemical segments, as we anticipate the global tanker rates after a robust growth in 2022 to stay high in 2023 and reflect in PVT's earnings. And now let's take a look on the screen and I will show you guys some information about valuation. Let's see. In this update report, we continue to use a 100% discounted cash flow value model, as we believe the DCF approach is the most suitable method to reflect the intrinsic value of PVT. We continue to apply a 15% transparency discount as the company is no longer releasing a quarterly bulletin like it previously did. Additionally, we believe the state's divestment progress is pending. We trimmed our target price by 11.2% to 23,100 Vietnam dong per share as we increase both our equity risk premium and cost of debt assumptions by 100 basis points and keep our 2022 to 2026 forward net profits after tax amount nearly unchanged. PVT's 2022 fleet investment progress. According to PVT's 2022 AGM documents, the company planned to invest in one of Fromo's crude tanker, $26.5 million for oil product chemical tankers, $77 million and one vessel for bulk transport or one oil product chemical tanker, $19 million. As of November 2022, the company has acquired 4 oil product chemical tankers, PVT Sunrise, PVT Stellar, PVT Anilo, and Aquarius in 9 months 2022, and 2 vessels, bulk Areca and Epic 9 in 9 months 2022. PVT also signed bareboat deals on the newly built LPG coaster October 2022 and two all-product chemical tankers, PVT Floor, in Q1 2022 and Erhan Designs tanker in October 2022, which did not require capex. However, PVT did not invest in an Aframos crude tanker. We expect this investment will be delayed into 2023. Figure number 6, net profits after tax and my forecast changes. Figure 7, target price derivation. Discounted cash flow. Figure 8, DCF valuation summary. Figure 9, PVT's free cash flow. Figure 10, sensitivity analysis of forward target price for PVT in relation to DCF, WACC, and terminal growth rates, ceteris paribus. Peer multiples, PE multiples. PVT's peers are not perfectly comparable as they are very different from PVT in the composition between spot and time charter contracts. Historically, most of PVT's peers have incurred losses due to low spot charter rates, whereas PVT has delivered decent profit thanks to its stable long-term contract with BSR as well as its floating storage and international time charter contracts, given its solid control in OPEX. PVT outperforms its peers in terms of ROE and has lower leverage along with solid long-term potential from capacity expansion and rising transportation demand from NSR. Figure 12, regional peers. Local peers are not precisely comparable with PVTs as they only have all product transportation businesses, while the majority of PVT's profits come from crude oil transportation. The company also has FSO and FPSO segments. EV per EBITDA multiples, as shown in figure 15. PVT did not consistently trade at a discount for premium to its peers in the past years. However, it traded at a 25% to 60% discount for most of 2015 to 2021, which we attribute to its limited investor relations activities and Vietnamese banks being risk averse regarding the shipping industry in the parts. Figure 15, PVT's historical TTM EV per EBITDA compares to peer medium. Recommendation history. Expenses. 1. Most tanker rates recovered in 9 months 2022, as shown in the figures below. Spot tanker rates for crude oil products and chemical LPG increased in 9 months 2022 due to the Ukraine conflict, which one has created a structural change in transportation routes for crude oil products, chemicals, LPG, and coal, in turn boosting ton-mile demand due to longer travel distances. And two, has caused shippers to ask for large premiums due to the risk of potential sanctions for sporting foreign Russian companies. Crude tanker rates surged in January to April 2022, cooled off in May 2022, and then skyrocketed in July to November 2022. In 10 months 2022, the Aframax time charter tanker rate Indonesia to Japan jumped 14.4% year-over-year in 11 months 2022. The Aframax tanker spot rate West Africa to US Gulf Coast skyrocketed by 265.5% year-over-year. According to Clarksons and PVT, the crude tankers market outlook remains positive due to one, underlying tanker fleet growth that is expected to be very limited, with a small number of orders booked. Two, crude trade demand projected to grow due to significant shifts in trade flow toward longer haul routes, gas to oil, switching to an improved Chinese demand despite OPEC's oil production cuts. In our last update report, we forecast 2022 crude tanker rates recovery would start to reflect in PVT's crude tanker rates in H2 2022, which led to our expectation for PVT's crude tanker rates to recover 5% year-over-year in 2022. However, we did not see this happen in 9 months 2022. Therefore, we delayed this assumption from 2022 to 2023. According to PVT and Clarksons, the outlook for the oil product chemical segment also remains positive. Supportive demand trends are continuing with growth in ton-mile trade as a result of expected significant shifts in trade patterns after the EU's ban on imported product from Russia comes into effect in February 2023. Furthermore, underlying tanker fleet growth is expected to be limited 2023 to 2024. Figure number 17, Brent oil price and Aframax. 100,000 deadweight tonnage crude tankers rates. 2. Ramp up of Nissan refinery bodes well for oil transportation. Crude oil transportation segment. PVT is negotiating with NSR for a long-term VLCC transportation contract. NSR's total refining capacity is 10 million tons of crude oil per year. This amount requires a total of 4 VLCCs taking turns to transport the crude. Given that PVN holds a 25% stake in NSR, PVT is negotiating with partners and expects to get a contract for 1 VLCC, implying roughly 25% of total crude oil volume of nearly 2.5 million tons from Cuba to Vietnam. Another three VLCCs could be operated by a Kuwaiti partner. Especially crude oil would be transported more than 8,300 kilometers for 18 days from Kuwait to Thanh province, with another 3 days of handling. We expect it will take roughly 40 to 45 days for a round trip, including handling time, which translates into 9 to 10 trips per year for PVTs if the plant operates at 100% capacity. Figure 19. Sea distance from Cuba to Thanh province. Sea distance 8,300 kilometers. We forecast net profits from NSR to contribute nearly 10% PA on average, beginning in 2024 forward, when a new VLCC starts to contribute. In this update report will reflect the current US dollar per Vietnam dong exchange rate into our forecast through our upward adjustment of VLCC revenue, but nearly unchanged net profit after tax due to increased operation costs resulting from higher than expected US dollar appreciation against Vietnam dong. We also expect NSR transportation will fully contribute beginning in 2024, with net profits after tax of 114 billion Vietnam dong, a profit on average 4.6 million US dollar, approximately 10% of PVT's net profit after tax in 2024 to 2026 forward. PVT's fleet as of November 2022. Figure number 424. PVT's fleet details as of November 2022. Financial statements. Yeah, and that brings me to the end of my presentation about PVT. Hope this video and some information as mentioned above will be useful for you. And if you want to open a legal trading account, don't hesitate to contact with us with the information on the screen so that we can support you. So thank you for your listening and see you next time.